Good morning. I have come with module 6.4 of salary computation. You have seen that 6 module is for salary computation. That's very important from your examination point of view. In 6.1 module, I have explained the basic things about salary, the definition, the features of salary income, what all are included in salary income. Module 6.2, I have explained provident funds. 6.3, I have explained the computation of gratuity. 6.4 is this module where we are going to learn an important concept, that is computation of pension. So here you have to remember that this portion is important for a theory question for section B or a problem for section B. Similarly, this computation you can expect in the full length salary problem also. Just like that, I told you in the gratuity also, section B, theory and problem, it's important. In the salary computation also, you will get an item related to gratuity. So it's very important. You should know the concepts of this computation. Even otherwise also, this pension, gratuity and all are common terms. Your parents are receiving pension. You heard that pensioners. You heard the term family pension. Pensioners benefit. Sometimes we can see in the newspaper, state government employees, central government employees, they are entitled to pension. Bank employees are entitled to pension. So this we should also learn. You are going to work. So sometimes you may also get a government job and you will be entitled to get pension. So how we are going to deal with the computation of pension is very important. So that is what we are going to learn. And I have to tell you the difference between commuted pension and uncommuted pension. That's very important in this computation. Usually students will make mistake with that two terms. If you can understand the meaning of these two terms, this computation is very simple. So I am giving you my example. Imagine I am retiring this month. June 2020 I am retiring. Till June I am getting my salary. July onwards I am supposed to get my pension. So that meaning regular salary is taxable whether he is in government sector or private sector. You know that everybody is paying tax for whatever salary you are getting. There is no exemption. Then a person who is getting salary after retirement, if he is getting pension, that will be taxable whether he worked in government sector or private sector. There is no exemption. That we call it as uncommuted pension, periodic pension or normal pension. That one more example I will give you. Usual pension is calculated, usually pension an employee is getting as a one third of the last drawn salary. I am taking an example for just for calculation purpose. Imagine I'm getting 3 lakhs as salary. So this month I told you I'm retiring. So 3 lakhs is my last drawn salary. One third will be 1 lakh. So next month, July onwards, I'm getting only 1 lakh. So this up to June, I'm getting 3 lakhs. That is completely taxable. Next month, July onwards, 1 lakh I'll be getting till my death. That will be regular uncommuted pension, that will be taxable. So this is very important. Uncommuted pension, normal pension or periodic pension. What is the meaning of periodic pension? It's monthly pension. Now you have to remember what is commuted pension. See, that is very important. Commuted pension, some exemptions are there. So that is commuted pension for a government employee is exempted. Commuted pension meaning, I will tell you the meaning. See, usual arrangement is that when we in the working life, when we are working, that time itself we will complete children's education, children's marriage, constructing the house, buying a house property, buying a vehicle, everything, major expenses. Now, after retirement, usually people need money for treatment, medicine or hospitalization. So major expenses, heart transplant or liver transplant or major surgeries, cancer treatment, COVID-19 or any paralysis, anything like that, HIV or anything like that, any disease can be very expensive. Treatment is very expensive in India. So imagine if you are after retirement, you have to meet a huge expenditure. So what you can request the government is you can request to commute your pension. See our example, I am telling you I am getting 1 lakh as my regular pension. So I am in need of money. I am requesting government 50% of my pension please commute and give because I am in need of money. They will not give an explanation how they are arriving at that figure. They will give me a lump sum amount. Maybe take an example of 30 lakhs I am getting by commuting 50% of my pension. So my regular pension, uncommuted pension will reduce to 50,000 because 1 lakh into 50 by 100 is 50,000. So that is the importance. Now commuted pension is coming into picture. I told you 30 lakhs is my commuted pension. Being a government employee, it's completely exempted in my case. Whereas I will continue to pay tax for the 50,000, the regular pension I am getting. Uncommuted, I was getting 1 lakh. After commutation, my pension is reduced to 50,000, but I got a lump sum payment of 30 lakhs. Again, computation, you have to remember, if a person is receiving gratuity and if a person is not receiving gratuity, there is a difference in computation that I am going to explain with the help of problem. Another point I want to explain. I always repeat the points which are from the examination point of view. So it will be helpful for the students. I want to tell you 2 points what you are going to learn in section 10. You know that what is section 10? Exempted incomes. Already 3 points we learned. Agricultural income is exempted. Incidence of tax we have learned that. Dividend from Indian companies exempted. Gift from relatives exempted. Gratuity, when I told you, gratuity at the time of retirement for a government employee is exempted. Next point you have to remember, pension for a government employee. Commuted pension for a government employee is exempted. So the 5 points you have learned for section 10 also. I will keep repeating this so it will be there in your memory. Now you have to remember, we are going to explain this concept computation of pension with the help of PowerPoint presentation. So computation of pension is divided into two. One is uncommuted or periodic or normal pension. It is fully taxable. Please remember, it's just like our salary. Till retirement we will be getting salary. After retirement we will be getting the pension. Now commuted pension, I have explained exemption is available. Commuted pension for government employees is fully exempted. I have explained that concept also. Now, continuing with the computation, tax exemption for non-government employees is divided into two. So, in the introduction also I have told you, those who receive gratuity and those who are not receiving gratuity. So, those who receive gratuity, 1/3 of full value of commuted pension will be exempted. Second one, those who does not receive gratuity, half of full value of commuted pension, that is 50% of commuted pension will be exempted. Repeating this again, if the employee receives gratuity, because this point is very, very important, exempted amount shall be commuted value of 1/3 of pension which is normally entitled to receive. Second point is, if the employee does not receive gratuity, exempted amount shall be commuted value of 1/2 of such pension. This what we are going to learn with the help of problems. Now another point you have to remember, who all are included in government sector. So government sector employees include central government employees. See in Karnataka, if a person is working for NIMANS, it's a central government employee. State government employee. Government college teachers coming under state government employees. Local authority, BDA, municipality, panchayat, all this corporation, all these are local authority. Second is employees of a corporation set up under central, state or provincial act. Karnataka State Electricity Board, Karnataka State Finance Corporation, Karnataka State, all these examples formed by the companies formed under Karnataka State. So these are the examples. Employees of public sector undertakings, Hindustan Petroleum Limited, BPCL, Bharat Petroleum, HAL, BHEL, all these are examples of public sector undertakings. Then another category is judges of Supreme Court and High Court of India. This is also another thing you have to remember, that when you learn house rent allowance and all, you have to learn that Supreme Court and High Court judges, they are getting certain exemptions. So they are also included in the government category. Now first problem we are going to do, compute the taxable amount of pension. Mr. K retired from a public limited company on 31st August 2019 and his pension was fixed at rupees 50,000 per month. He has not commuted any part of his pension. Pension is payable on the 1st of next month. Please remember that when I explained that in the beginning, basic features of income. I told you there are two methods of paying salary for an employee. This is June month. See, one option is when complete 30th June, I am supposed to get my salary. Or first, that is when we call it as salary is paid on the last working day of the same month. That is June 30th itself, I will get my salary. Or payable on the 1st of next month. July 1st, I am going to get my salary for June. So these are the two options that will make the changes in the calculation. Please remember, Mr. K retired from a public limited company on 31st August. So here in this case, up to 31st August, he got his salary. Now, September, he has to get his pension. But here the problem is September he will not get. His pension he will get in October only. Now he had to remember that he is a public sector company. So he is a government sector employee. But it's an uncommuted pension. So he is not eligible for any exemption. Uncommuted pension will be taxable for everyone. Now you see the calculation table showing the value of taxable pension. Uncommuted pension received in the previous year. I told you salary is payable or pension is payable on the 1st of next month. So from September pension he will be getting in October. So October, November, December, January, February and March. So 6 months he will get the pension. So 6 months, 50,000 each. He will get 3 lakhs as pension, fully taxable being uncommuted pension. Whether he is in government sector or private sector, it will be fully taxable. Uncommuted pension, periodic pension or normal pension. Just like salary. Only the term is different. Till retirement you will get salary. After retirement you will get pension, fully taxable. That is the meaning of uncommuted. Now, second problem, similar problem as first one. Mr. K retired from government service, government sector employee, 30th September 2019, and his pension was fixed at rupees 10,000 per month. He has not commuted his pension, so it is uncommuted. Pension becomes payable on the first day of next month. Uncommuted, though he is a government employee, there is no distinction between government employees and private sector employees, fully taxable. So 30th September he is retiring. October he has to get the pension, but he will get from the November 1st only. So now the calculation table showing the computation of pension. Uncommuted pension November, December, January, February, March. 5 months he will get 50,000 fully taxable, as uncommuted pension is taxable for everyone, whether he is in the government sector or in the private sector. So please remember that the calculation of uncommuted pension is clear to you. Two problems we have worked out. Now I am bringing another adjustment. Mr. K retired from Karnataka government service on 30th June 2019. His pension was fixed at rupees 30,000 per month. He got 1/3 of his pension was commuted for rupees 6 lakhs. His pension is payable on the first day of next month. Compute the value of taxable pension. Now here commuted pension is there, uncommuted pension is there. See, compute pension is payable on the 1st of next month. So here also the 30th June he is retiring. July pension he will get on August 1st. Now we are dividing the computation. Table showing the computation of taxable pension. So commuted pension 6 lakhs is completely exempted being a government employee. So here there is a difference. If it's a commuted pension, you have to see that whether he is in government sector or in private sector. Commuted pension for government employees is completely exempted. This you can write in section 10, exempted incomes also. Now we are coming to uncommuted pension. I told you from August only he will get. See, he commuted 1/3. So the remaining pension will reduce to 20,000. 1/3 meaning 10,000 is gone from his regular pension. Now he will get 20,000 only. His pension is reduced 20,000 per month. And how many months? August, September, October, November, December, January, February, March. 8 months. 8 months into 20,000, 1,60,000 fully taxable. Uncommuted pension is fully taxable. Now fourth problem. Now I am bringing one more adjustment. When he is receiving gratuity, when he is not receiving gratuity. So K retired from private company on 30th April 2019. And his pension was fixed at 50,000, 15,000. He got 50% of his pension commuted and got 8 lakhs. He also received rupees 7,50,000 as gratuity. He got his pension commuted on January 2020. Pension is payable on the 1st of next month. Compute the value of taxable pension. Three adjustments are here. First of all, you have to remember he is a private sector employee. He has commuted his pension. Private sector employees commuted pension is taxable. That you have to remember. Second one is uncommuted pension is there. That also divided into two. One is before commutation, that is from January. January he commuted. So February and March his pension will change. And uncommuted pension. Uncommuted pension, then the gratuity adjustment also. We have to learn this. These three adjustments I am bringing. Table showing the value of uncommuted pension. So uncommuted pension, you have to remember how many months he is going to get the pension. He is retiring on 30th April. 30th April and pension is payable on the 1st of next month. So April, May he will not get. He will get from June only. He will get from June. So June, July, August, September, October, November, December, January. He has commuted his pension in January. So 8 months he will get the full pension. 15,000 into 8. So that he will get. 15,000 into 8 he will get. Now that value is 1,20,000. Now you have to remember uncommuted pension is there. Uncommuted pension 2 into 7,500. That is for 2 months. February and March his pension is changed because 15,000 one half is commuted. That meaning regular pension is reduced to 7,500. So 7,500 into 2 is 15,000. So taxable uncommuted pension is 1,20,000 plus 7,500, 1,27,500. It's fully taxable. Uncommuted pension is fully taxable. Now you have to see that commuted pension. So commuted pension, you have to remember that now he is in the private sector. So computation is divided into two. Whether he is receiving gratuity and whether he is not receiving gratuity. So he has received gratuity also. So exempted up to 1/3 of full value of commuted pension. So you have to remember 50% of pension is commuted for 8 lakhs. You have to calculate the full value of pension. So 50% is 8 lakhs, meaning full value will be 16 lakhs. Now exempted portion is 16 lakhs into 1/3. So that meaning 5,33,333 will be the exempted pension. Now what is taxable pension? 8 lakhs minus 5,33,333 is the taxable pension. Don't make a mistake. Usually students can make a mistake. They will reduce from 16 lakhs. 16 lakhs is your full pension. This employee got only 50%, that is only 8 lakhs. That is why we are reducing from 8 lakhs to 8 lakhs minus 5,33,333. Please remember it's not 16 lakhs. 16 lakhs we have calculated for computing the exempted value. So this also you have to remember. So this will be the taxable pension will be 2,66,667. Now the last problem in this module, Mr. R retired on 31/12/19 and his pension was fixed at rupees 36,000 per month. He got 3/4 of his pension commuted for which he received 18 lakhs. Find out the commuted value of pension if he gets gratuity and he is not receiving gratuity. Pension is payable on the last day of the month. So far we have calculated pension is payable on the 1st of next month. Now we are changing that computation. Pension is payable on the last day of the month itself. So he retired on 31/12/19, December. So January's pension he will get in January itself. 36,000 was his pension. 3/4 of his pension he commuted and he is getting 18 lakhs. Now we will see the computation. Table showing taxable amount of pension if he gets gratuity. Computation is divided into two. One is commuted pension, second one is uncommuted pension. So commuted pension computation. 3/4 of pension computed for 18 lakhs. So what will be the full pension? 24 lakhs. 18 lakhs into 4/3. Exempted amount 24 lakhs into 1/3. So 8 lakhs he will get exemption. So here taxable pension is 18 lakhs minus 8 lakhs. That is 10 lakhs. Please remember you have to subtract from 18 lakhs, not from 24 lakhs. students can make a mistake. 24 lakhs we calculated for computing the exempted value. What he received is only 18 lakhs. Now, uncommuted pension. See, he is 36,000 is his regular pension. 3/4 he has commuted. So now remaining 1/4 only he will get. 3/4 already commuted and he got the lump sum payment. So 1/4 is 9,000. So taxable pension, he retired on 31st December. So 3 months only he will get. January, February, March. So here you have to remember taxable pension is 27,000 fully taxable. Now, table showing the taxable amount of pension if he is not receiving gratuity. So here it will reduce to 1/2. So here full pension is 24 lakhs. Exempted pension 24 lakhs into 1/2. That meaning 12 lakhs will be exempted. So that meaning 18 lakhs minus 12 lakhs, 6 lakhs will be taxable. So this is the treatment. Don't subtract from 24 lakhs. 18 lakhs is the value of pension, commuted pension he got. So 18 lakhs minus 12 lakhs, 6 lakhs will be the value of commuted pension. So I hope the explanation is clear to you. I hope that the theoretical concepts and the problems are clear to you. We have learned different concepts. What is the meaning of uncommuted pension? What is the commuted pension? Commuted pension for government employees completely exempted. You can use that in section 10 also. And commuted pension for private sector employees divided into two. If he is receiving gratuity and if he is not receiving gratuity. And two types of salary payment also we have included in this. One is salary is payable on 1st of next month. Second one is salary is paid on the last day of the month itself. So these are important and I hope that it's clear to you. This is an important computation. You can expect section B questions and the full salary computation problem also. This concepts will be there. Gratuity, pension, all are important components. That is why I have included as separate modules. I hope it's clear and please feel free to tell me the feedback. So this is the very important point. I want to get your feedback. Then only I can improve my presentation. Then only I will be a good teacher. This lockdown period, may you all be healthy and you will be working hard to get good marks. So that is my wish for everyone, whoever watching this video. And as I told you always, please listen to this video, learn the concepts. You maintain your own notebook. Then you have to remember, you write the questions in your notebook and do the problems with your own explanation and understanding you received. If you get any mistakes, if you make any mistakes, again go back to the video and see that. That is how you can improve. I told you this paper, you can score marks only through your hard work. Nothing else is going to help you. So I'm wishing you all the best. See you again with the next module. The next module, I'm going to explain leave encashment, computation of leave encashment. So that is the next module. So I'll see you with that. Thank you for watching.